And that's one of the reasons that gold is $4,200 an ounce. And, if it keeps up this pace, it'll be at 5,000 before Thanksgiving and over 6,000 by Christmas. Yeah. I think gold surging like this every day, going up. This is the best year for gold since the 1970s. This is not a coincidence. You know what happened in the 70s. And so I think this is a warning sign. The real crisis could hit next year when we see a big collapse in the dollar against other fiat currencies and a big break in the bond market, meaning much higher interest rates at a time where our debts are exploding.
It's getting harder to ignore the flaws in the global financial system. The US currency is depreciating and gold prices are rising to new all-time highs. Peter Schiff, an economist who supports gold, thinks this is only the beginning. He links the quick ascent of gold to an increase in political meddling in monetary policy, particularly Donald Trump's attempts to influence the Fed. In addition to endangering the Fed's independence, Schiff claims that this change may pave the way for aggressive money creation, a decline in interest rates, and ultimately a decline in trust in the dollar. He cautions that the stock market's apparent short-term resilience may be a symptom of deeper deterioration that is being driven by unsustainable debt and cheap money. Schiff contends that in an era of currency devaluation, investors are turning to hard assets like gold not only as a hedge but also as a need as the dollar's purchase power declines. According to him, if the current trend holds, gold may reach $5,000 before the year is out and rise even more as political pressure on the Fed and inflation increase. If you want more content on precious metals investing, be sure to like, subscribe, and click the bell.
Everything's out of control. And then you look and they go, hey, inflation's at 6% or whatever. And foods, except for food, shelter, and fuel.
Yeah.
Okay. Well, what in the world? How do we figure out what actual inflation is? Have you ever thought about this, Peter?
The government creates inflation. It nurtures it. Inflation is the government's baby. I mean, it's their silent partner. But the government never wants to come out and tell the public that it's causing inflation, because obviously the consequence of inflation is that prices go up and the public doesn't like that. But government creates inflation. The definition of inflation is an expansion of the money supply and credit. Who expands money and credit? The government does that. So the government creates inflation. The result is prices go up. But why do they create inflation? Because they don't want to raise taxes to pay for all the deficits. So they print the money, and the public doesn't realize that they're paying the cost. But instead of paying it in taxes, they're paying it through higher prices, through inflation. Plus, also, inflation makes everybody think they're richer, right? The numbers, look at the stock market today. Everybody is talking about the record high stock market. The stock market in 1999 was worth 45, the Dow was worth 45 ounces of gold. Today, it's worth 11. So the stock market in 26 years priced in real money, because once upon a time when you bought the Dow, like if you bought the Dow in 1920, you paid with gold dollars, you paid with real money. But so measured in real money, the Dow Jones has dropped 75% in 26 years. But, the people don't realize that because they're measuring the Dow with inflated dollars. And that's why it's, 46,000.
The government causes, I totally get it, but they're colluding.
Well, of course.
They're colluding.
But now Trump wants to make it worse, because Trump wants to completely control the Fed from the Oval Office. He basically, he's stacking it with his people the way Roosevelt stacked the Supreme Court in the 1930s. Trump is stacking the Fed. And that's one of the reasons that gold is $4,200 an ounce. And that's one of the reasons that gold is $4,200 an ounce. And, if it keeps up this pace, it'll be at 5,000 before Thanksgiving and over 6,000 by Christmas.
Yeah.
But the thing they have to recognize, what people have to recognize is, yes, you could be a billionaire today, but if you have your billion in U.S. Treasuries, you could be broke tomorrow. So what's key is where it's like, where am I going to put my assets to preserve their value? Not necessarily looking for the best new thing, but looking for a way to protect yourself from the dollar debasement, from inflation. That's what people should be focused on. I just think, though, that, and you guys, could just watch out for this over the next several weeks, couple of months. But, I think what happened on Friday, late in the day with the tokens and Bitcoin, I don't know that was a one-off thing just related to Trump's post. That could be just a dress rehearsal for what's about to happen in crypto. It's possible that gold is pricking that bubble. And I think the risk is high right now of a major crash in that market. I mean, probably higher than I think the risk has been since I can recall, that the bottom could just drop out of this market. You have so many people, so bullish, so long, so leveraged, thinking nothing can go wrong. And to me, it looks like it's an accident waiting to happen.
Well, that leverage got flushed on Friday.
I don't think the
$19
leverage is
billion.
anywhere near flushed.
Peter Schiff makes a distinction between Bitcoin, which he considers to be entirely speculative, and digital gold tokens, which are supported by actual ownership of physical gold. He notes that while both gold and silver have risen to all-time highs, Bitcoin has fallen over 25% since August when compared to gold. According to Schiff, this expanding disparity indicates that gold is still rising in value amidst increasing global unrest, while Bitcoin is failing as a real store of wealth. He explains that the demand for gold is being driven by the Federal Reserve's rate decreases in spite of persistent inflation, growing government deficits, and unrelenting money printing. Gold's position as the ultimate safe haven asset is being reaffirmed by central banks and major investors who are expanding their gold reserves. Schiff also disputes assertions that the increase in gold is unrelated to actual economic dangers. He brings to investors attention the subprime crisis's early warning indicators, which were disregarded until they erupted into the 2008 financial catastrophe. He thinks the same pattern is playing out today. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Yeah, I think this is really kind of a put up or shut up moment for Bitcoin because, for years it's been hyped up as digital gold, as a hedge against dollar debasement, inflation. And Bitcoin is now in a pretty big bear market priced in gold. It's down more than 25% as we speak from where it was in August. And so gold is making record highs. Silver is breaking out to record highs. The world is de-dollarizing. Massive deficits as far as the eye can see. Fed cutting rates and the rising inflation. All this is very negative for the dollar. And central banks are getting out of dollars, but they're buying gold. Bigger investors are now starting to look for hedges, and they're buying gold. And what's Bitcoin? I mean, if Bitcoin is not a store of value, if it's not a safe haven, if it's just a tech stock, well, what kind of tech stock is it when it has, not only does it have no earnings, because there's some tech stocks that also don't have earnings, but it has no prospect of ever having earnings. At least when you buy a tech stock, you're betting on the potential for future earnings. Bitcoin has no potential to earn anything. So yeah, I mean, 2 points on digitized gold. The good thing about it is it's actually still gold. It represents ownership of real gold. And what digital gold does is it improves on the monetary properties of gold. It makes it more fungible, more portable, and better to use as a medium of exchange, right? So that's what
you're
Bitcoin
talking about.
Was
actual
to do.
Tokenized gold and not the nickname of Bitcoin as
right. I'm talking about real gold that you own,
gold.
But you own it through a token that you can exchange with other people. But yeah, I get it that the Trump family has taken a big stake in Bitcoin. That's another problem I have with the Trump administration. But, I think that the biggest consensus trade right now, where you have the most can't lose, only can go up attitude, is in Bitcoin for the reasons that James just mentioned. It seems like everything has gone right. There's nothing that can possibly go wrong. And that's when the market goes in the other direction. And I would say that given all that Bitcoin has going for it, as far as hype and the politics behind it, with all that, why isn't it going up now? Why is it going down? Why is it collapsing? I think that's a warning sign that the bottom's about to drop out of this. Bitcoin and gold going up for, I think, different reasons. But, I was just listening to Scott Bessett was interviewed just before we started talking, and he was asked about the rise in gold and if he's concerned about it. And he completely brushed it off and says, there's nothing to worry about.
Peter, do you like gold? Are you interested?
Well, of course, but let me finish my point here. But Scott Bessett basically, no, we don't. It's not a warning sign. Everything is great. We're cutting government spending. The U.S. economy is great. Inflation is gone. So gold's going up for reasons having nothing to do with inflation or loss of confidence in the U.S. I mean, completely delusional. And then he went on to praise Alan Greenspan as the maestro, as a great Fed chairman, without even realizing that Alan Greenspan is the main reason we had the 2008 financial crisis. It was his reckless monetary policy that fueled that housing bubble and the mortgage finance bubble. And yet he doesn't even get that, because he wants the Federal Reserve to do the same thing that Greenspan did. He wants rate cuts and more money printing, and he has no idea that the crisis that's coming is going to be much worse than the financial crisis that the Fed helped create before. This is going to be a sovereign debt and a U.S. dollar crisis. And I think what's happening in gold right now is very reminiscent of what happened in subprime in 2007, which really was, foretold the '08 crisis. And when that warning bell went off, nobody believed it. Nobody on Wall Street, nobody at the Fed. Ben Bernanke said, don't worry about subprime. It's contained. And I was saying, nope, this is the tip of an iceberg. Get ready for a major financial crisis. And it hit the following year. I think gold surging like this every day, going up. This is the best year for gold since the 1970s. This is not a coincidence. You know what happened in the 70s. And so I think this is a warning sign. The real crisis could hit next year when we see a big collapse in the dollar against other fiat currencies and a big break in the bond market, meaning much higher interest rates at a time where our debts are exploding.
Jimmy Carter, it feels like not necessarily 2008. I mean, I think the criminality and the lack of transparency of what's really happening in the economy is definitely like 2007. I actually really do like your canary in a coal mine, gold coming up. I mean, I think that's actually a really good point.
Peter Schiff issues a grim warning regarding the state of the American economy and a harsh critique of Bitcoin, during which it must ultimately demonstrate whether it is a legitimate digital asset or merely another speculative one. Schiff notes that although gold and silver are reaching all-time highs, Bitcoin's price in gold has dropped by over 25% since August. This reveals Bitcoin's shortcomings as a store of value, in his opinion. Global de-dollarization, soaring deficits, and a Federal Reserve that continues to lower interest rates despite rising inflation, on the other hand, are all contributing to the success of gold. He observes that big investors and central banks are purchasing gold rather than Bitcoin and dumping dollars. Schiff contends that politics and hype, not fundamentals, are the only factors underlying Bitcoin's value. He claims that Bitcoin has no profitability and never will, in contrast to tech equities, which at least have the potential to make money. He does, however, commend the idea of digital gold tokens since they facilitate value storage and trading and represent real ownership of physical gold. According to him, this blends the finest aspects of contemporary technology with actual, palpable wealth. He then criticizes what he perceives as financial executives' complacency, citing remarks made by Scott Bessent, who said that the gold boom was unimportant. Schiff refers to this mindset as delusional, reminding the audience that such conceit was prevalent before to the 2008 financial disaster. Thanks for watching. Be sure to like, subscribe, and ring the bell for the latest gold and silver updates.